Well, hello and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space. EdTech company PhysicsWallah is expected to launch an IPO soon. Sources say the company is looking to raise $500 million at a valuation of $5 billion.
B2B seafood startup Captain Fresh bags 100 crore rupees in a funding round led by Motilal Oswal Wealth. This values the startup at a little over 4,400 crore rupees. Reports say it appointed Axis Capital and Bank of America as bankers for its upcoming IPO.
Swipe turns its core payment business cash profitable in FY24. Revenues jumped from 247 crore rupees in FY22 to 275 crores in FY24. The total payment volumes rose 106% on a year-on-year basis. The payment provider's current annualized revenue rate is at $12 billion.
A slew of exits at Ola Electric saw the stock fall over 4%. Most recently, the firm's Chief Marketing Officer Anshul Khandelwal and Chief Technology Officer Subonil Chatterjee resigned effective immediately. Both cited personal reasons.
Indian Space Research Organisation will launch its final mission for 2024 later tonight, attempting a space docking experiment. The mission is crucial to achieve future goals like setting up a space station and sending a human to the moon.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, PhysicsWallah is gearing up for an IPO in the next 4 to 6 months and is looking to raise $500 million. Remember, the EdTech unicorn had raised $210 million in September at a valuation of $2.8 billion. Rachna Dhanrajani joins us now with the details. Rachna, what is the valuation target for PhysicsWallah as far as the IPO is concerned?
$5 billion, that's the valuation that Alak Pandey-led PhysicsWallah is eyeing for its upcoming IPO. CNBC-TV18 has learned exclusively from its sources that $5 billion is the valuation and the plan is to raise about $500 million. The IPO is expected to be launched in the next 4 to 6 months. This will make PhysicsWallah the first pure-play edtech company to hit the public markets. The company has roped in Axis Capital, Kotak Mahindra Capital, Goldman Sachs and JP Morgan as its book-running lead managers. This comes days after the company transitioned to being a public limited company, rebranding itself as PhysicsWallah Limited. Just in September, PhysicsWallah raised about $210 million at a valuation of about $2.8 billion. And now, in less than a year, they would be seeking a double of that at $5 billion. This is despite reporting a revenue of 1,940 crore rupees at a loss of 1,130 crore rupees in FY24. As the IPO draws closer, all eyes will be on the company and how it balances its growth ambitions with profitability. Back to you.
Right, Rachna, many thanks for those details. Now, cybersecurity and quantum computing startup FortyTwo Labs eyes 100% year-on-year growth in the coming years. On the sidelines of Huddle Global in Trivandrum, the startup's co-founder Dipankar Agarwal said he aspires to be a company which offers solutions for any digital transaction and digital trust security for quantum computing across the globe. Take a look.
All right, Dipankar, rapid fire with CNBC-TV18. First question, what is the name of your startup?
My startup name is FortyTwo Labs. It is into cybersecurity and quantum computing.
In one sentence, can you describe what exactly it is that your startup does?
Yeah, so it is, our mission is to secure all the digital transactions using our quantum computing algorithms and technology.
Okay. And what exactly is the problem that you are trying to solve?
So currently there are, in the cybersecurity world, there are 5 different tenants which are very much, to secure them, there are a lot of complex solutions which are into the market to make sure that every tenant is secured. It is very difficult to correctly and easily, implement it.
All right. So what's your solution to the problem?
We have built a PI control platform based on our indigenous cryptographic algorithms, which helps in securing all these 5 tenets, which I would like to name is like identity, authentication, confidentiality, privacy, and provability. So all these things can be secured using our platform.
Okay. And what will you do in revenue this year?
It will be close to 14 to 15 CR.
Okay. And what's your revenue projection likely to be in the near to medium term?
Year on year, we see 100% growth going forward.
And what is the key differentiator that sets you apart from competition in this space?
So the key differentiator is our quantum computing algorithm, which we have got a patent around it, and it is being widely used by currently with Indian Defence and some of the largest banks.
And what is the funding that you've received thus far in your startup journey?
Around 8 crore till now.
And who are the investors?
They are angel investors.
And moving forward, what's the one wow factor when you look back you would notice and pick out in your startup journey thus far?
Wow factor, I would say we have received an award from our Honorable Defence Minister to our contribution to the Indian Defence.
Last question, where do you see yourself and your startup in 5 years from now?
5 years from now, I would say we would want to be a de facto worldwide for any digital transaction and digital trust security on the quantum computing across the globe, I would say.
I hope that happens. All the very best. Thank you so very much for speaking with us.
Thank you.
Now, moving on to what's brewing today, Bizom, the retail intelligence platform which optimizes distribution processes for retail brands, has announced a Series B funding round of $12 million. It was led by Pavestone, which contributed about $7.5 million, alongside participation from India Mart and an existing investor, as well as other family offices. The funding is going to be directed towards scaling the company's innovations, support the development of delivery mechanisms, and also the expansion of key accounts. For more on this, joining me is the CEO of the company, Lalit Bise. Also with me is my colleague, Arundhati. Lalit, welcome to Startup Street. Thanks very much for your time here. Let's start with the $12 million Series B funding. What specific advancements in your AI-driven retail, or rather real intelligence initiative, can we expect now that you have this money in the kitty?
Absolutely. So one of the things that we are looking at is to change the entire route to market ecosystem in FMCG. This includes your field sales executives, the retailers, and distributors. Our fundamental belief is that these offline players in this FMCG can digitally empower themselves, and our aim is to make them more intelligent. That is where we are using technologies like AI agents, even augmented reality, virtual reality, to essentially help them make better decisions on the field at the point of inspiration, as we call it, to essentially allow to serve the consumers who are moving more towards online far better through the same offline ecosystem that we have in India for decades.
Right, Lalit, Arundhati stepping in here. The funding will also support the development of delivery mechanisms and the expansion of key accounts. Currently, over 600 retail brands utilize Bizom to digitalize their route to market operations, right? So how many more accounts do you hope to add with this funding, and across which markets?
Right. So, Arundhati, thanks for asking that question. As you would already, so what we say is almost 10% of India's FMCG already flows through Bizom. So when you buy something in a nearby friendly neighborhood kirana store, 1 out of 10 chance that this would have flown through Bizom's ecosystem. So this money is primarily not raised to add more logos as much as it is used to deliver more value to the existing logos that we have, and essentially to make sure that we are able to help consumers buy right products at right price at the right place, or essentially also help the large FMCG companies to sell right products at right place at right price. That's essentially the aim, and that's what, like you correctly mentioned, the money would go towards improving the delivery and key account management practices to deliver more value to the existing accounts of Bizom to a large extent.
Well, Lalit, you're already serving about 30 countries with Bizom. Do you have plans to target new markets as well? What would those be? And how do you plan to scale your delivery mechanism for, a global retail enterprise?
Absolutely. So as you can see, so India has about 15 million unique mom and pop retailers, or as we call it as kiranas, right? It's the largest ecosystem in the world. So once Bizom started working in India, became a market leader in India, it became very easy for us to scale to across other emerging markets, whether they're in Southeast Asia, Middle East, or Africa. And that's essentially what large FMCG companies started doing, where it started taking the best practices from India and then replicate it to their other emerging market economies using a platform like Bizom. And that's how we already expanded to about 30 odd countries. Today, from a delivery point of view, the way we look at it is there are key strategic geographies where we are setting up our own teams, like in Dubai for EMEA, or for Jakarta in Indonesia for ASEA. And from there, we are building a network of channel partners who will do individual delivery in individual countries as we need. So for example, we have a channel partner for Vietnam, we have a channel partner for Saudi Arabia, we have a channel partner for Nigeria, and so on and so forth. So those are the partners who help us extend our implementation and delivery services in those specific geographies or markets. And this money will essentially help us build and scale more such partnerships, relationships, apart from allowing us to expand our teams in the key strategic geographies.
Right. And Lalit, what sort of revenues and profit growth have you had in the last few years? And at what pace is the business expected to grow from here on out?
So, Bizom, for us, COVID essentially pushed a lot of our brands into the digital transformation overdrive, as we call it, because everybody became aware that without digital, the business is going to be hard in future. So that fueled our growth over the last 3 to 4 years. We have been growing at good 50-60% year on year over last 2 to 3 years. We intend to maintain that growth rate, and even we obviously hope that we will even accelerate it even further from there.
Well, Lalit, how are you seeing, overall, if you step back, the retail commerce landscape? Because, increasingly the commentary we are hearing from the large FMCG players that you service as well, offline traditional stores are grappling with the challenges because of the rise of quick commerce. Tell us what you're seeing on ground and how are you supporting these traditional companies?
Absolutely. No, that's a great question. Thanks for asking that question. So as you can see, the quick commerce has already kind of proven that consumers are rapidly moving towards online way of purchasing daily needs or groceries and stuff like that. So consumers definitely prefer online. But our fundamental belief as a company is that when this is done at a scale, it's not the separate quick commerce companies building their separate supply chains. It's the actual original supply chain of India, whether it is the mom and pop shop owners, whether it's a traditional distributor, wholesalers, they will be the ones who will still be able to serve the consumers moving online. Like one of my favorite author, Rama Bijapurkar, says, India is an and country. It's not an or country. It's not that quick commerce is going to kill the kirana. It is that quick commerce and kirana will exist side by side, the same way modern trade has existed along with kirana side by side. And essentially the kiranas will digitally empower or evolve themselves to serve even an online consumer. And that's the area we focus on. And that's why I mentioned a lot of our money goes also towards building those tools and enablement products and making those kiranas and the ecosystem more intelligent to allow them to sell online in the world that is moving more and more towards consumers preferring online purchases in general, as quick commerce has already proven. So I don't think quick commerce will replace kirana. Quick commerce is an additional mechanism for a particular niche consumers that exist in apartment complexes in urban areas.
Right. And Lalit, what are your long-term plans for Bizom, especially with the new year coming, the key milestones you want to sort of target in the next 3 to 5 years?
Right. So in next 3 to 5 years, we have very, very simple areas that we are looking at. Apart from existing our SaaS business, which essentially digitalizes the route to market ecosystem for brands and continue to grow that at 50-60% year on year, we are also helping our brands to put their products in the right kirana category to connect them to online demand generation, like an ONDC, for example, right? So our hope is that we are able to build an ecosystem where there are 1 million retailers in India who are digitally connected through supply chains. Out of that, about 100,000 or 1 lakh out of them, we are empowering them with credit kind of a products in our ecosystem. And this is something Bizom can already do with their connects with about 8 million odd kiranas in India. So out of that 8 million, we would like to convert about $1 million on a fully digitalized supply chain, or sorry, 1 million outlets on a fully digitalized supply chain, and about 100,000 out of them even empowered with products like digital credit.
Well, Lalit, you've given us a picture of how, business might pan out. And we asked you earlier about your revenue and profit projections, but we were wondering if you had any plans to go public. I mean, that seems to be the case with many of the startups in this space. We've seen a flurry of listings, especially in the last month of the year. Over the next 3 to 5 year horizon, does an IPO feature anywhere in your plans?
So IPO will happen when it has to happen. I think IPO has many other constraints. So we are not building company to for IPO or an exit. That happens when it happens, when it's the right time, is how I would put it. And if, like you correctly said, if you are profitable and growing, being IPO is always a choice. We are fortunate to have a public company on our cap table like IndiaMart, who obviously helps us, guides us in the right time to go live. I would say typically as a small business, you are looking very detailed for next year and a half to 2 years. So I don't see us going public in next year and a half to 2 years. Beyond that, who knows? I mean, fingers crossed, maybe that's the right time to go public and we get multiples like Unicommerce. We'll all be happy about it.
Well, and we'll wait to see when that happens. Lalit, thank you very much for your time here on Startup Street today. It's been a pleasure speaking with you. Thank you.
Thank you for having me. Yes.
Well, on that note, it's time for us to take a short break. But up next on the other side, Swiggy lists down the flavors that dominated the palate of Swiggy customers in 2024. We'll get you a roundup of that on the other side of this break. Welcome back. Now, from the flavorful boxes of biryanis to the South Indian dosas, how India Swiggied, the 9th annual report by Swiggy unwraps the eating and ordering trends across the country. In a chat with Rohit Kapoor, the CEO of Swiggy Food Marketplace, my colleague Aishwarya Anand learns more about the top trends and also discusses the skepticism around the need for a 10-minute food delivery. Take a look.
After delivering a blockbuster IPO, Swiggy is here with its year-end report on how India ordered in 2024. Let me take you through some of the key highlights. Dosa remained as the top food choices with 23 million orders. Chicken rolls emerged as the most ordered snack with 2.48 million orders. Ras Malai and Sitafal ice cream were among the fastest delivered items, averaging just under 10 minutes. Not only that, a man in Bikaner received an ice cream in just 3 minutes. Dinner, of course, emerged as the Bahubali of meals on Swiggy with 215 million orders. And India's most favorite food for the 9th consecutive year remains to be biryani. 83 million orders in 2024. That means 2 biryanis were ordered per second. I have with me Rohit Kapoor, who is the CEO of Swiggy's Food Marketplace. Rohit, thank you for joining us for this year-ender chat on some of the interesting ways India has Swiggied this year. So help me understand, India is definitely not bored of biryani, but are you bored of talking about biryani?
A little bit I am bored because every time I come on air, it is all about biryani, but the love continues unabated. So I'm always amazed that whenever people say that there are so many brands on biryani in a city like Hyderabad or Bangalore, and more keep coming up. Of course, the debate on which is the best biryani, whether aloo should be in the biryani or not, that continues. And definitely, I think the biryani from different parts, cities and states is actually very different. So that continues.
That continues.
Yeah.
Yeah, like, we always say that the less said about biryani, the better it is, because people take it personally. However, I also want to ask this from you, that you've been doing this report for a few years now. Help me understand that for you this time, in 2024 Trends Report, what were some of the standouts that, absolutely blew your mind, and you were like, okay, where are we getting these numbers from?
Yeah, one of the things which stood out for me was the sheer kilometers driven by delivery partners. So our delivery partners drove 2 billion kilometers approximately. South Indian in general and dosa particularly for breakfast or even otherwise is entering mainstream cuisine. And other than that, few things, chocolate lava cake continues to explode. Sitafal ice cream, when you offer it fast, flies faster.
Yeah.
A lot of fun stuff.
For me, what stood out from the report was 3-minute delivery of food items through this new feature that you've launched, that is Bolt. Whether we're talking about ice creams, we're talking about burgers. But that also brings me to the other part of the question, and that is there have been some concerns that's been raised around the quality of food that would come through Bolt, right? Bombay Shaving Company's founder Shantanu Deshpande had mentioned that, you know, like this, if we go this way where we are preparing food like that, we will go the US-China, we will take the US-China route, and that's not really healthy. So when you have already launched a business like this, I want to understand, how do you address these concerns?
Yeah, so I think, look, the 3-minute is a trivia. So it's not the norm, but it is a fun stat anyway. I think we're aiming to do more like 10, 12 minutes, and coming squarely to the concerns. Look, Shantanu is a good friend, but he's also a bit alarmist at times, right? First of all, I just want to put this squarely on record, that it is the same food you're getting in 30, 40 minutes.
Yeah.
It is not different,
Yeah.
right? So how does this work?
Yeah.
Right? It works on 2 or 3 simple principles. One, it offers, let's say, 40-50% of SKUs which are ready. Because you know what, Ashwarya, people are very particular about their food.
Yeah.
They will not have it.
Yeah.
Right? So it's the same McDonald's ka aloo tikki burger, and Domino's, which is started on bold. It is the same pizza which they are doing. Plus, what we are doing is we are working closely with the restaurants to cut out inefficiencies.
Yeah.
And the second principle is very also important, that this doesn't travel far. Here, it is being catered to less than 2 kilometers thereabouts.
Thereabouts.
Right?
Okay.
So
Understood.
travel time will be between, let's say, 5 or 6 minutes or 7 minutes once it's ready, right? I think it's a lot of optimization. It's not easy. It sounds simple and easy. It's a lot of hard work. It's probably the first of its kind in the world this model has been tried, where it is not coming from one store or one dark kitchen and getting delivered fast. It's actually coming from your favorite restaurants, all of them. I think it's very easy to fearmonger and create that perception.
Yeah.
Right? It is not correct.
Yeah, because I think that was one of the fear-mongering that led Zomato to shut down the business that they were piloting with quick deliveries, but you've gone full-fledged rolling it out as a service. So
The consumer is voting for it, by the way, right?
You know, that's another thing that I wanted to ask you. This 10-minute quick delivery that we're talking about, I want to understand, is it has it been the consumers who have driven this initiative for you, or are you driving this initiative for consumers? Consumers are
Always,
the one.
always. We don't drive anything for our consumers. That's not, because it doesn't work that way, right?
Yeah.
I think, look, if you roll back, okay, this isn't the first time the 10-minute delivery paradigm is getting questioned.
Yeah,
right?
yeah.
When quick commerce was launched, say, who needs anything in 10 minutes?
Correct.
Then now people are consuming everything in 10 minutes. There are many consumer needs which fit squarely into saying, if you can get to me fast and with the right amount of quality, the consumer is voting with their feet and their wallets, right?
Talking about Bolt, in a recent interaction with CNBC-TV18, you'd mentioned that it's already clocking 7 to 8% of the platform's orders. So, I mean, if you're talking about, you know, we have to put a target to the end of next year. How do you see the platform grow?
I don't want to put a target because I think that may restrict me. We scaled up real fast. We went to 400 cities in, what, about 45 days, right?
Plans on expanding the number of cities, though?
Not much.
Not much.
I don't think on Bolt especially. The overall number of cities are close to 700. On Bolt we are 400. We might add a few here and there, but I think we are in most cities where
you need to be. Swiggy food business is already EBITDA profitable. But today, if I have to ask you, what's like the revenue mix between your online food delivery business and Dine Out?
So look, Dine Out share of pie has increased because simply Dine Out business is growing much faster than food, right? I don't think it has materially become a very substantial part of food yet. So it's a pretty win-win model. I think it's growing very well. It's beautifully positioned. We are near profitability in that business as well.
Okay, all right. Thank you so much, Rohit, for speaking to us. I wish you a very, very happy new year. And once again, a big congratulations on hitting the public markets.
Thank you, Ashura. Thank you for having me.
Thank you so much.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.